And it's another trading day right here in Lagos, Nigeria. Here's what's coming up in the next 55 minutes. Kenya lawmakers agree to drop planned 2.5% motor vehicle levy. And Tanzania's meat exports significantly rise, jumping from 1,700 tons in 2022 to 14,000 tons in 2023. And Ghana's reached an agreement with Eurobond holders to restructure commercial debts of $13 billion. And it's great to have you join us. First off, let's check on the markets now. Let's take a look at what's happening in the metals market. We see investors who are waiting for the U.S. inflation data. That's due later this week, but already seeing the impact right there on the safe haven metal at $2,346. So we're seeing some kind of rebound there, 0.10%. Up for silver, $29.62, up about 0.32%, while palladium is trying to get back above that $1,000 mark at this point, 0.66%. The biggest mover right there in the metals market. We see bullion was down about 5% from record high of $2,400 per ounce. That was touched in May 20th, and rally which happened against traditional headwinds such as strong dollar and high interest rates. Let's get a check on the oil market now. See, oil prices were a little change today as worries about China's economic recovery prospects that offset supply concerns stemming from tensions in the Middle East. But we're still seeing a big drop there, over 0.5%, 0.60% for Brent at $85.46 a barrel. And we see WTI, that's a U.S. grade, still above that $80 mark. That's the one the Dangote refinery is getting at this point, 0.58% down. So I guess that's good. Seeing the price down, that's good for the refinery at this point. Both benchmarks rose about 3% last week. Well, crude producers in Nigeria are frustrating the efforts of domestic refiners. That is the allegation from the Crude Oil Refinery Owners Association of Nigeria. The chairman, Mr. Momo Yarhua, who was a guest on Business Morning, says that although the Petroleum Industry Act protects local refiners, implementing the law has been delayed. Take a listen.
In the PIA law, in section 109, there is DCSO, which is supposed to be domestic crude supply obligation to support the local refineries. And I think that law was specifically put there by the legislators not to starve the local refineries. But what we have seen is a huge and stiff resistance from the producers of crude in Nigeria. They would rather prefer to export crude abroad than to sell to local refinery. What I have always said is that crude is not used for any other thing than for refineries. And if we have functional refineries in Nigeria, why shouldn't we be able to support? I think also the government has to play its role to ensure that the laws that they have passed are actually implemented. Because we are trying our best, we are pushing as member of Quran, including Dangote, that's recently come into operation, and is also part of us now. We have been collectively pushing. We have been holding several meetings and all of that with NMDPROA, NUPROC to ensure that there is adequate crude supply to refineries in Nigeria so that we can meet the local need. In fact, as it stands today, with Dangote production and the production from the modular refinery, we are currently self-sufficient in the production of the primary products, which are diesel, fuel oil, naphtha, and kerosene. And Dangote is producing aviation fuel. There is really no reason for importation of product into the country.
And now to the financial services sector. Well, it appears certain persons are not happy with the central bank's recapitalization plan to ensure that the subsector remains vibrant and able to meet its obligations. A coalition of civil society organizations, while addressing the media, claims that these vested interests are patching up plans to create a diversionary campaign to stop the proposed banking sector recapitalization, which requires commercial banks with international authorization to increase their capital base to 500 billion naira and national banks to 200 billion naira. Take a listen.
Our gathering today is to alert the federal government, the Central Bank of Nigeria, the Economic and Financial Crimes Commission, EFCC, the Department of State Services, DSS, the Bankers Committee, and the Nigerian media to an organized plot by some vested interests within the Nigerian banking system to begin to orchestrate a diversionary gaslighting campaign to stop the proposed banking sector reforms. What is the goal of this group? It is to either delay or force the Central Bank of Nigeria to drop the ongoing reform of the banking sector, so as to elongate the stay of their paymasters at the helms of affairs in some of these sick banks. The capitalization program, as you well know, requires forensic audit of the books, of the loan books. This is what they do not want.
Still looking at financial services, according to a recent Central Bank of Nigeria's monthly economic report, credit facilities borrowed by Nigerians from banks, that rose about 3.82 trillion in January 2024. Accordingly, the total consumer credit, that rose by 11.9% in January 2024 from 2.64 trillion naira in December 2023. Personal loans accounted for 79.2% of consumer credit, while retail loans accounted for 20.8%. Join us now to discuss the numbers and issues in the fintech space. We have Ifeoma Abidoye, she's a fintech consultant, joining me via Zoom. Great to have you on the show. Good afternoon.
Good afternoon, Ladi. Thank you for having me.
Fantastic. It's great to have you. So it seems like the harsh economy is pushing people to borrow more, at this time, looking at this data. But how are you seeing it?
You're right. I mean, there's been a lot going on in the past 1 year or so in the Nigerian economy. Inflation has gone up. A lot of things have happened. Now, let's unpack it. So we're saying that consumer loans have increased. They've increased to about 3.83 trillion naira. And the reason for this, we can summarize it to three main headings. I mean, there are many reasons, but three main areas. Inflation has gone up. We have high unemployment, and wages still remain the same. Now, let's look at inflation. If we look at inflation, inflation has gone up to about 33%, more than 33%. And a core component of the inflation is because of food increments. Prices of food has increased a lot in the past 1 year. The headline portion is 33% of the inflation. And if we look at the food inflation, that's even over 40%. Now, when you have the prices of things going that high, it's only natural that people who are not able to afford what they used to use or what they used to afford once upon a time have to take loans. Another thing that has happened is because of the changes in the economy, there's been an increase in unemployment. Although statistics say it's about 5%, but in reality, it's more than that. And the reason why it's 5% is because of the method that has been used to calculate unemployment. We have adopted an approach that says individuals who don't have work in a week, who don't have some hours of work in a week, is what we classify as unemployment. In reality, if you have someone who is working just 1 hour in a week or a couple of hours in a week, it doesn't really mean they're employed, because what is the wage from that short time going to get them? It won't be enough. Again, the wage has not increased. The wage that we had, the minimum wage we had in 2019 of 30,000 naira is still what we have. And so when you combine all these factors, people have to survive, people have to meet their needs, people need a way to bridge what they have, what their income is able to provide them with, and what their needs are. And the way they're able to do that is to take loans, and that's why we've seen an increase in the loan portfolio.
Right. And that reminds me of a saying, he who goes in borrowing goes in sorrowing. So I hope this is not sorrow that's loading at this point. But looking at digital lenders, we know they're big, in this market. Their loans go out really quick, and we know their interest rates, are really high. So if Nigerians are borrowing a lot, at this time, that means the digital lenders, like the loan apps, that means they'll be making bank at this time. So talk to me about this. We've seen in the past when oil marketers were making money, when oil prices were really high and people were suffering. We saw that there was some kind of windfall tax, for these kind of companies that are making, a lot of revenue from the oil market. So looking at the digital lenders, do you think there should be some kind of windfall tax, for some of these loan apps at this time?
So don't forget that even as lending increases, right, the rate of default, unfortunately, will increase. And the reason is, if you look at the 5 C's of credit, where when you're giving credit out, you consider character, capacity, collateral, and all that. If you look at the capacity component of credit, the capacity hasn't necessarily increased. So it means that we're also going to, unfortunately, see an increase in defaults. So for that reason, I wouldn't recommend that we increase taxes in that sector, because people are really just taking loans because that's what they need. But we're going to see a high increase in default, and the fintechs, the banks who are offering these credit facilities will also be affected by that. So that's something that we need to look out for as well.
Right, because I know those loan apps, they charge humongous interest rates for their loans. But we see Nigeria's debt stock is also rising, hit about 121 trillion in the first quarter of 2024. How are you seeing debt sustainability for Nigeria and its citizens, seeing that Nigerians are taking a lot of credit in the first quarter also?
So our debt has increased to 121 trillion naira. And interestingly, that's a large increase. Interestingly, our income hasn't increased to meet that gap. Now, a large component of that debt is external debt. External debt is about 42 trillion naira, right? And our foreign reserves right now is about 33 trillion billion. Sorry, external debt is about $42 billion, whilst our foreign reserves is less than that, about 30-something billion dollars. So we're looking at a situation where even our foreign reserves are way less, about 70% of what we owe externally. And what I would advise in that situation is, given that our debt continues to increase, I think this is a time where, as a country, as an economy, we begin to look at ways of increasing income. So debt is already existent. We can't do much about it, right? But we can increase our income. There are many ways we can do that. We're looking at, we need to start thinking about diversifying. We're looking at things that we should be looking at things aside from our traditional income sources, which is, oil. Let's look at ways to expand our agri sector. We have arable land. We have things that can help the nation build the economy, build our income profile. So let's look at that. Also, if we're looking at mining as well, the other day, gold bar was presented to the president, meaning that there's a prospect there. So what I think the government should be doing at this time is looking at ways to improve and increase income. So debt is on one hand, but if we're able to increase income, the income to debt ratio that we have will be more sustainable and more efficient, and it will be a healthier ratio for the country to look at.
All right, let's look at another burning issue now in our just financial tech space. We're seeing when it comes to fintechs, we've seen that sectors, seen some setbacks, with the interbank settlement system. That's NIBS. It experienced a 3-day downtime, earlier this month, and it seems these downtimes, make this sector quite vulnerable, at this time. I'm talking about diversifying. We know NIBS is all they have at this point. That's for the payment infrastructure. Talk to me about what we should be doing now to reduce these downtimes that we see with NIBS.
You're right, Ladi. There's been one too many downtimes. We had the downtime earlier this year, and we had one earlier this month, and another one now. So what those downtimes do is reduce consumer confidence. Most bank customers are, not sure about using banking applications or, using transfer to make payments. It has reduced the confidence in the banking sector's transfer system. However, one of the things that the banks can do, or one of the ways that we can see a solution to that is, because right now what we have is NIBS is the primary switch between banks. And by that, I mean, NIBS is sort of the interface that allows one bank transfer funds to another bank. Now, we have NIBS as the primary interface. We have other switches. And maybe it's time for us to begin to look at using and adopting other switches as a primary or one of the primary switches. Right now, we have NIBS as the only primary one. And what we can do is have another one. So if you have another one, the likelihood that both of them are down at the same time will be reduced. And so if one is down, you ensure that you're still able to do transfers between one bank to another, regardless of if NIBS is down. But what that would entail is for the CBN, or to give a mandate saying this switch has now been recommended as, because InterSwitch there are a lot of other switches in the market, and InterSwitch has different players have switches. If you are able to recommend one that every player can use and adopt as a secondary or also a second primary switch, you're able to avoid such downtimes that just halt business at once. And what that will entail is CBN mandating it, because that will now then give the players a reason to move ahead to use them. That's another switch.
Right, definitely, because we need more switches at this point. I remember one time when there was that downtime, I spent about 2 hours in the supermarket, trying to make payments, and there was a queue just to try and make payments and get your goods out. Well, thank you so much. It was great having your perspective, Ifeoma Abidoye, Fintech consultant. Thank you so much.
Thank you so much, Ladi. Have a good day.
You too. All right, we'll take a break now. When we come back, we're going to head straight to the markets. That's the moment. Do stay with us. Welcome back. Well, the billionaires are out to play at this time, and one is the chairman of FBN Holdings, Femi Otedola, raising the stakes right there with FBNH, and we have Will with the details at this time. Will, I don't know if you're a billionaire, but I know billionaires are playing right now.
Yes. Oh, we are also actually playing in that circle right now. That space is really hot, laddie. You need to join it. Right. We saw Femi Otedola, that's the chairman of Aviation Holdings, increasing his stake in that company by about 2.2% yesterday to bring it to about 11.63%. And gradually taking on that, those numbers are really growing
about
there.
11%.
That's about 11%, 11.63%. And this is just 4 days from when he started on Thursday to acquire more. Right now, I think his share stands about, say, 4.17 billion.
Wow.
That's what we have for out of the outstanding 32 billion, FBN has out there.
I guess this is the moment I say, God, when?
God, when? But let's have a quick take. Let's talk to an analyst who's going to give us a quick insight there. Let's talk to Mukhtar. Mukhtar is standing by virtually. Mukhtar is the CEO of Finance with Mukhtar. Mukhtar, let's get your quick take on this. I know you're very busy, but thank you for making out time to talk to us about this. Femi Otedola, the serial investor, is increasing his stakes in Aviation Holdings. And on Thursday, we saw him buying over 863 million shares. And yesterday, he increased the stake by an additional $797 million. It now holds a combined value, as I was talking to Ladi, about 4.17 billion shares of the company's total outstanding shares of 35.89 billion. How big is Otedola's ambition here?
Well, Femi Otedola is one of the most ambitious investors, and you've seen that with some of the companies like Geregu and others. And so what we've seen for the past 3 years, he has invested over 100 billion into FBN. And so now he's not the largest shareholder. What investors are actually looking towards is being among, like you said, being among the billionaire. It's time for most sure investors who want to join that wagon. That is one. Then secondly, Femi Otedola buying into FBN, we give him the kind of leverage they've always wanted that bank to be. Remember, that's one of the oldest banks in Nigeria. And so that also will help. And then if you look at his track record, what he has done with other companies like Geregu and others, a lot of investors are excited if they are part of FVN Holding, and those that are not part are looking forward to be part of it. But one thing that you expect from a Femi Otedola having a stake in FBN Holding is, one, you expect good dividend payout henceforth, and then price stability, because he is the largest shareholder. Rather than selling, he will want to buy more to take his stake and to let people know that he believes in the brand of FBN Holding. So for any investors, shrewd investors, you're looking for good dividend payout and price stability, FBN Holding is the share to be in now.
Thank you so much, Mukhtar Mohammed, CEO of Finance with Mukhtar, for sharing that. I know you're very busy. We're just going to let you go now, but investors do need to know what to expect from this increment and what Otedola is about to do or change the market. Probably is going to be a game changer. We'll watch and see. Thank you so much, Mukhtar, for your insights. Now let's continue with the market equities in Africa, where we see sentiments were mostly negative at intraday. Nigeria's NGX was down at intraday by about 0.44%. We've not lost that 99,000 level yet. And sentiment report from yesterday showed 40% buy interest and 60% sell-off. That's not so good. South Africa's JSE was also in the red at intraday, 0.4%. And meanwhile, we see Egypt's EGX30 was up at intraday. That's the number, nearly 1% there. And you see Kenya closing Monday's session in the red. But let's away from the equities market now. Let's check in on the fixed income space, and let's bring in Chuka Nwachukwu, who is the Group Head, Asset and Liability Management, UBA. Chuka, it's good to have you on the program again. Chuka, we just want to know what happened on Monday. The bond auction that ought to have happened June the 16th, but because of the Salah break, we did see that rescheduling, and now we have 450 billion was on offer, but we saw less than what they were able to raise, less than what they wanted. They got about 297 billion naira. That's 66% of the target of 450 billion. Are we beginning to see a tapering in demand in that space? And what do you think is responsible for this?
Thank you. Like you rightly mentioned, 450 was on offer. About 297 billion was sold. Subscription was about 307 billion. So what we've seen so far is that over the past 2 quarters, we've seen elevated yield. This is because of activities on the CBN trying to encourage investors to come in. So we've seen the OMO, for example, 1 year OMO, effective rate at 22.5%. And so, investors obviously will demand for higher yield, and that's also has also filtered into some of the traders' sentiment. When you have elevated yield, for example, and there's no outlet, they become expensive to keep some of these securities. However, for banks, looking for long-term investment as well as looking to hold position, I think yield around 21%, 22% for bond securities is a good yield to keep, especially when we know that towards the end of the year, we see a reduction in yield, probably around maybe like 15, 16%.
We'll definitely keep our eye on that, Chuka. But what is liquidity like in the market? So we know it opened Monday in a credit of about 951 billion naira. Are we seeing similar levels today?
Yeah, it's just a little shy of the opening of yesterday. Today is currently around 930 billion. Though there will be, of course, yesterday's bond auction settlement is tomorrow, and so we expect to see a little below 300 billion leave the market. Tomorrow again there will be NTB auction about 225 billion will be on offer. Thursday will be settlement date, and so we expect some of this liquidity to reduce. However, we do not see any major outflow, other than these two settlement I've just mentioned. But so we expect to see between now and end of the week, system liquidity still, very positive.
Okay, so speaking of that now, we still have that credit you've mentioned, barring the auctions settlements for tomorrow, starting tomorrow. What instruments are investors trading, and at what end of the yield curve, and what interest rates are we seeing here based on the liquidity that we talked about?
Yeah, so with the elevated liquidity in the market, we expect to see bullish sentiment. And so interesting securities, especially on the T-bill side, we see players, playing on the shorter end of the curve, which is the 182 days, especially the last auction. We've seen it a bit bullish. On the longer end of the curve, which is the bond side, we also see, interest on the 2033 as well as the 2029 bond that had just been on offer. So these are the two securities on the bond side that are quite attractive. For the T-bills, like I mentioned earlier, we see 182 days interest, and then some also cherry picking on the 1 year bills as well.
Thank you so much, Chuka Nwachukwu, Group Head, Asset and Liability Management, UBA. It's always good to have you on the program. So we'll move on now to other markets. We'll move into the Middle East now, where the Gulf equities were trading mixed at intraday. We see Abu Dhabi down 0.28%. Dubai also following in that stead, 0.14% down. Still within the region, Saudi, that's the Tadawul world, is up 0.24%. And the Qatari index is also up 0.69% and is extending its rally to a 16th session. And this is lifted by gains in sectors such as the energy, materials, and finance sectors. Now let's just scoot over quickly to the U.S., where stock futures rose in early trade today, but we see the Dow Jones tapering there, and this comes after chip maker Nvidia and other tech stocks brought the Nasdaq to its worst day since April. Now, futures tied to the Dow Jones was down 0.11%. We see the S&P 500 also, not also, but up 0.15% in early trade, and Nasdaq futures was also up 0.41%. Now, Nvidia, just speaking about that, sank nearly 7% on Monday, building on that 4% decline from last week, and the stock is entered a correction territory now. We've seen that slump raising about $430 billion. Other connected semiconductor and artificial intelligence names also fell, with Super Microcomputer also dropping 8.7%. We see Qualcomm shedding 5.5%. We've seen Broadcom also declining nearly 4%. Information technology was the worst performing sector in the broad index. And as a result, you see that index was dropped by 2.1%. Now let's go to the Asian markets. Now we see Japan Nikkei 225 closing up 0.95%. That's nearly 1% up, back to 39,000 level there. And looking at data from that country, we see the services provider price index for Japan climbed 2.5% year on year in May. Now South Korea's Kospi was also up 0.35%, and we see the Hang Seng in China up 0.25%. But look at China. Let's look at mainland China. It's down 0.44%. And while other major equities in the markets in that region rose, the index dropped by this amount. And we're seeing this coming as reports, following the market there. We see that flip reaction with the Hang Seng and the Shanghai index. And because of the reports that the Biden administration is probing the 3 Chinese companies in that, and they're worrying if Beijing will be able to access the American data there. So a lot of things going on in that Asian space right now. We see the Australian markets up 1.36%. That is, it's just so much interesting stuff going on with China and with the EU and the US right now that tussle with the tax on, chips.
All the tariffs right there. And another question I have in my head right now, I know Davido is getting married today. How's that going to impact Nigeria's market today? Who knows?
You're going to be looking at how it's going to impact Davido.
All right, we'll get to check it out. Thank you so much, Will, for the details there for most of the markets that we track here. All right, let's take it on to London now. We have Juliana joining us from our London studio. Great to have you, Juliana. So we see reports that yesterday was really hot in the UK. Any update on the impact, and how's it feeling right now?
Yeah, it's a very interesting story to discuss with you, Laddie, the weather. But I've got to say, anybody who lives in the UK would know that, of course, the weather is an important part of discussion. I don't think you can actually move around in the UK for more than 24 hours without discussing the weather, because it does impact everything in this country. We know that it was a very, very rainy spring. I think, in fact, rain fell 35% more than it would have typically during the spring months. And we know that this has had a negative effect on the economy, because there are so many businesses that significantly rely on people enjoying the sunny outdoors and sitting outside. But alas, those who weren't able to reap the benefits from warmer weather in the spring will have a very good couple of days, because, as you quite rightly said, it is extremely hot at the moment. I think yesterday, across certain parts of the country, we recorded our hottest day of the year at 28.3 degrees Celsius, which is quite funny because there's a raging debate online of memes, people mocking the Brits, asking why you could be so hot when it's just 25 to 28 degrees. But then, of course, you've got to look at the infrastructure in this country, which is very much Victorian. Most offices and buildings don't have air conditioning. So when it's hot on this very small island, it can be very, very, very humid. We haven't seen the worst of it. Today is much hotter, I think, across certain parts of the country, particularly where we are, where our studio is located in the centre of town. I think we're going to reach about 30 degrees today, and then tomorrow it's going to be even hotter. Sadly, for us that dream of warm weather, it isn't going to last. Of course, this is Britain. So I think the Met Office have asked people to expect thunderstorms and heavy showers from Thursday onwards. But look, this is summer. So when the sun is shining in Britain, people are smiling, we feel better, and of course, England are playing football tonight. I know you didn't get that invite to Davido's wedding, Laddie.
I guess the invite got lost.
But you can watch England tonight.
Yeah, I'll watch England, definitely. I'll be rooting for England at this point. But how are the markets looking at intraday?
Tip-top shape at intraday. There's been some highs all week. But alas, actually, the FTSE has hit negative territory. There have been some trading updates. We did get some positive trading updates. One from Morrisons. Morrisons is one of the big 4 grocers in the UK. There were some fears, actually, that some of the smaller disruptors, such as Aldi and Lidl, who are offering heavy discounting, could perhaps have snuck in and taken part of Morrisons' market share. That hasn't happened. They're still doing exceptionally well. Also got some trading updates from Deliveroo and Just Eat, which are these kind of online delivery apps, they're also doing very well, which is a good sign because, of course, consumer confidence, if you've got money in your back pocket, you're going to order a takeaway, aren't you? So that's good, although that hasn't flipped the FTSE into positive territory at intraday. The all share is down. It's down 0.19%. FTSE 100, the blue chip laddie, that's down by 0.19% too. And the FTSE 250, the domestic market, that's down by 0.62%. In the currencies market, the British pound is currently trading up against the US dollar by 0.02%, up to against the euro by 0.12%, and down on the Japanese yen by 0.11%, laddie.
All right, Juliana, thank you so much. We'll see if England can bring it home this time. Thank you.
I know, we hope so.
All right, now let's take it on to Europe now. We see the EU's antitrust feud with tech giant Apple is deepening, with Brussels levying its first charge under its new competition rules. Join us now is Chibonda Chimbelu, right there with the details. Great to have you, Chip. So what's the latest on this saga?
Thanks for having me. Well, Laddie, the EU has accused Apple of preventing app developers from directing users to cheaper options outside the tech giant's App Store. The European Commission says that a preliminary investigation has found that restrictions that the iPhone maker imposes on developers breaches its Digital Markets Act, so that is the DMA. Now, this marks the first time Brussels has leveled charges under that regulation. The new rules went into effect in March, and with the DMA, the EU wants to prevent big tech, so-called gatekeepers, from cornering parts of the digital market by threatening companies with huge financial penalties. The latest accusation means that Apple could face a fine of up to 10% of its global revenue, and that would amount to tens of billions of euros. Now, the European Commission opened investigations into Apple when the DMA took effect in March. It also has a separate probe looking into whether iPhone users can easily change web browsers. And it has other cases involving Google and Facebook parent, Meta.
All right, how has Apple responded?
Apple has said that it will continue to listen and engage with the European Commission. The tech giant doesn't just face fines of up to 10% of its global revenue. The financial penalties could also rise to 20% if the offense is repeated. Right now, Apple has the opportunity to respond to the Commission's findings, and Brussels will have to make a final decision on the charges regarding the tech giant's compliance by March 2025. Now, in recent months, Apple has said it has made a number of changes to comply with the DMA after feedback from both the European Commission and developers. And on Monday, Brussels also said it is investigating whether the fees Apple charges developers breach its rules. Now, those fees include a charge of 50 cents for every download that companies are forced to pay for apps that are used by more than 1 million people. Now, the EU's allegations show that Apple is facing a lot of pressure to its business model here in Europe. In fact, Apple said it won't be rolling out its AI tech this year on the continent due to concerns over the Digital Markets Act. Now, the tech giant says the EU's DMA requirements could force it to compromise the integrity of its products when it comes to user privacy and data security.
All right, what can we expect from the market to Europe today?
Well, Laddie, European stocks are expected to trade higher today. Investor concerns over trade tensions between the EU and China are easing somewhat. On Monday, Brussels and Beijing said they are planning to hold talks about the EU's planned tariffs on electric vehicles. And markets will also be keeping an eye on France, the bloc's second biggest economy. French President Macron has said that voting for extreme parties could spark what he called a civil war. Now, his own party is trailing in the polls against the far-right RN. And in terms of data, there's not much happening apart from the release of Spain's final GDP figures.
All right, Chip, thank you so much for the details in Europe right there. Let's take it on to Africa now. We see the Deputy Speaker of the House of Representatives in Nigeria, Honorable Benjamin Carlos, urge the Nigerian community in South Africa not to give up, but to persevere until they achieve success. He emphasized that Nigerians can prosper without resorting to illicit activities, and encourage them to change the narrative by developing platforms to engage with policy leaders for progress. The Deputy Speaker was speaking at a town hall debate in Johannesburg, hosted by the Nigerian Consulate. And to Kenya now, Kenyan lawmakers have voted against a proposal to introduce a 2.5% motor vehicle levy. One of the new tax measures have led to street protests in the East African nation. Other contentious duties requiring a vote include a 16% value-added tax on bread and a new levy on a wide range of products, including diapers and sanitary pads, where there were shouts of reject the bill from the opposition, which wants the raft of new tax measures, known as the Finance Bill 2024, scrapped. And Tanzania's meat exports have seen a significant rise, jumping from 1,774 tons in 2022 to 14,701 tons in 2023. Growth in meat exports attributed to the government's efforts to revitalize the livestock sector, including a substantial increase in budget allocation for the sector, rising from 32.1 billion Tanzanian shillings. Now to Ghana. Now we see Ghana's Eurobond holders have forgiven $4.7 billion and have reached an agreement with Eurobond holders to restructure the commercial debt of about $13.1 billion. The agreement, which will see Eurobond holders take a haircut of 37%, about $4.7 billion in addition to delayed repayments, represents the third and final step in the country's external debt restructuring negotiations. And to our next conversation, we see aviation fuel, also known as dual-purpose kerosene for airplanes and helicopters, is currently imported into Nigeria, with the Dangote refinery now set to produce aviation fuel locally. There are potential implications for the pricing and availability of the crucial resource. Let's talk to Teva Kumeka now. He's a research manager at financial derivatives company. Great to have you on the show. So what impact do you foresee on the pricing of aviation fuel in Nigeria, considering the shift from imports to local production?
Good afternoon, Ladi. Thank you very much for having me. Yeah, what you read is correct. Dangote, with the completion of the refinery, we are going to see high production of aviation fuel and other petroleum products in the country. What is the implication of this development? There is going to be increase in availability of aviation fuel and other petroleum products, and there will be increase in market competition. This is going to reduce risk of shortages and increasing the price of petroleum products in the economy, in Nigeria and the sub-Saharan Africa. There's going to be increase in cost of production. Unlike importing crude fuel, refined products from other countries, which has cost implication in terms of shipping, import duties, and exchange rate expenses. With the completion of Dangote refinery, which is a good news to Nigeria and other neighboring countries, we are going to be seeing reduction in the price of oil because competition will increase. So major suppliers of petroleum products in the market will need to adjust their prices in order to have more buyers. So the price, due to this competition, the price of petroleum products, including aviation fuel, is likely going to come down in the short term.
Right, and we know a major cost component there for aviation is jet fuel. That consists of about 40% of direct operating costs. So do you think domestic production of aviation fuel could reduce the cost of airfares, in Nigeria? Is there a possibility of that?
Well, you're correct, but this is not strictly one-on-one. Of course, with the increase in aviation fuel by Dangote refinery and reduction in the cost, we're going to see a reduction in airfare. There will be lower costs because aviation fuel, as you read, has a higher percentage in the cost of operating airplanes in the world. So lower airfares will lead to more affordability for travel and increase the number of passengers. Increase the number of passengers will lead to increase in profitability to these air operating firms, and this increase in their numbers will increase their profitability. The increase in profitability will lead to expansion in other routes, which will lead to further growth in the industry. The growth in the industry will have a positive impact on the overall economy of Nigeria. So we're going to see increase in the number of passengers and increase in the revenue of these operators in the aviation sector, which will lead to overall growth in the sector and more to the overall economy of Nigeria. The overall domestic production of aviation is likely to reduce this effect, boost airline profitability, and help mitigate other cost implications that these operators in the aviation sector face.
So we see the Dangote refinery that with a capacity of about 650,000 barrels per day. They've recently started exporting jet fuel while still seeking crude supplies from international oil companies. And we've seen the management of Dangote refinery saying that the IOCs operating in Nigeria prefer to export their crude rather than sell it domestically to the refinery. So what are the implications of this for getting affordable aviation fuel?
Yes, like this is really sad. According to my boss, it's like in a football match scoring an own goal and equalizing and jubilating. So what you just read is we just scored an own goal against ourselves. With the presence of Dangote refinery, we shouldn't be having issues of importing fuel again. So I don't want to comment much about the business specific aspect of it, but what we're going to see is that there are going to be supply chain instability, which will disrupt the operational activities of Dangote refinery. This will lead to cost implication. Cost implication in the sense that Dangote will have to rely on importing crude from more unfavorable sources like US and other places. This will have serious implication on the economy. So my interest is what is the implication of this not gaining on having Dangote refinery and IOCs refusing to supply or sabotaging his refining abilities. We are going to have implications. This will reduce job creation because the refining of crude will create jobs for the teeming youth in this country. So Dangote not being able to source for crude oil from domestic IOCs will affect job creation, affect local content in the oil sector, and we have a devastating effect on the overall economy.
All right, we'll keep tracking that. Thank you so much. It was great having you, Dr. Teva Komeka, Research Manager at a financial derivatives company. Thank you so much.
Thank you very much for having me.
All right, now let's head to other markets now. Let's take a look at what's happening with Bitcoin. We've seen that massive drop from the $70,000 levels. Did touch about $59,000. Let's look at the sentiment in the market now. I know it's neutral yesterday, but it's still neutral at this point. But 44 points is what we have today, neutral. So investors are not afraid, but not greedy, at the same time. So they know where to stand right here in the market. All right, now let's look at some of the top cryptocurrencies we track. Now we see Bitcoin did manage to come up above that 59,000 level. We'll see some headlines now. Upcoming Hamster Combat airdrop. We see investors are expecting bracing for when Hamster Combat launch will come at this point. The March is as a mini game. It was released in March as a mini game application on social media platform Telegram. It's a game that can be accessed via chats themselves. We know a lot of people like to tap, at this point, and they're always tapping, most of these games. Now we see institutional investors have offloaded about $714 million in Bitcoin. That's institutional big investors, at this point. We've seen the outflows from the spot Bitcoin ETFs at this point. All right, let's bring in Rume Ofi now, financial market analyst. Hello, Rume. Great to have you.
Good afternoon, Larry. It's my pleasure.
Right. So, Rume, I know we talk a lot about meme coins, on this show, and we know somebody's getting married today, Davido, and he has a meme coin. But I'm wondering if the meme coin is reacting to Davido getting married today. How are you seeing it?
Larry, the truth is the SEC have actually come to say that people should be careful of Davido's meme coin, that it's the conventional way of making money off gullible people thereabout. And a lot of people have been careful now, and a lot of people have actually collected their money. Those that have interest to invest are not seeing that as an investment direction. So I don't think it will have anything to do with the idea of someone getting married or not. But very sure, I think one of the only mover of the industry for now when it comes to price is that of CZ, Changpeng Zhao of Binance. I don't think Davido has that capacity, even though a few of us that are key players are not comfortable. In fact, very angry with the fact that he has come and infiltrated our industry with his pump and dump coin, where he has made a lot of money. Maybe use a few of it for his marriage.
But Rume, I hope you got an invite, to the wedding at this point. But
I don't think I want to get involved with Davido, because I'm still agreed with the fact that he came to our industry to do stuff.
Yeah, we definitely wish Davido the very best, definitely. But we're seeing the SEC in Nigeria. They've released, they've issued a framework for virtual asset providers at this point. Talk to us about this, and is it meeting expectation?
Yeah, so I must give kudos to the SEC DG right about now, Dr. Timi Agama. He has really got into action. If you ask me, I would say he hit the ground running. He understands the industry very well, to a reasonable extent, where we could also make things happen. They've been a directive, the virtual assets provider document before now. I think that is not well robust enough. So he's coming to put something that will make it even better, the ARIP. So there's an incubation stuff for virtual asset providers where it could be more like a think tank thing where ideas could be exchanged for us to have a more robust framework, between virtual asset issuers and the authorities. It makes a lot of sense. It's the article, the document came up some days ago, I think around on the 21st of June, to be able to make virtual assets. So if any players in this industry that is either a virtual asset issuer or custody person or thereabout, or exchange provider in this part of our world, to come up to register for that, to see how far the regulation could have more way to be able to make our industry more acceptable, like with best practice around the world, and make things work actually. So people are already doing that. I think that has a timeline for about 30 days. I think that make a lot of sense as far as I'm concerned. It will also open up a couple of other more discussions for a proper regulation. And I think with that, people will not come in to do all sorts of coins and put a lot of things to be able to tarnish the image of the industry. Yeah.
All right. Well, we'll keep tracking to see how it's accepted by the crypto industry right here in Nigeria. Thank you so much, Rume Ofi, financial market analyst. Thank you.
Thank you, Adi. It was a pleasure.
All right, so that's the show today. You can visit channelstv.com for more updates. I'm Ladi Williams from me and the team right here at Channels HQ. It's bye for now.